In today's interest rate markets, I'm going to focus on the 10-year note. 10-year note catching a bid today, finally, after a week or more of some significant selling pressure. We saw the 10-year note actually catch a bid today, pushing yields lower. 10-year note pushed up to the March future, pushed up to that 121.55 level. So again, we saw a nice bounce, and I think that corresponds with what we're seeing in the equity markets. We saw the equity markets under some significant pressure today. We saw most of the major averages down between 1 3/4 to 2.5%, and with that, we're seeing that kind of safe haven or flight to safety or risk off trade. And so I think that's one of the driving forces here while we're seeing this rally in bond prices and yields being pushed a little bit lower to start the week. Again, looking at the dynamics, as I pointed out, it's that risk shift. We went through a significant risk accumulation period the last several weeks, and that kept pressure on the 10-year note. We saw the equity markets, continue to drive higher even into last Friday's expiration. Now, after a 3-day weekend, we got some news items that kind of changed the dynamics, some global slowing storylines coming out of the IMF, coming out of China as well. We had some disappointment over the tariff negotiations in the middle of the day today. Also, I think putting pressure on yields and driving prices higher as well. And so again, as we continue to move through this cycle here in the early stages of 2019, I would expect you're going to see those correlations between the 10-year note and the bonds in general continue that inverse pattern to the equity markets, because we're seeing again this risk on, risk off type of environment with these high volatility days in the equity markets.